Hello, everyone, and a very warm welcome to today's cryptocurrencies update for September 1st, 2023. You wonder why is this guy then showing this intro slide from last week's update where I presented a plethora or multiple choice of Elliott wave counts that we had to start tracking because Bitcoin and Ethereum dropped below key invalidation levels. Well, very simply because we have now narrowed down those options from about 4, I would say, to 2 with an alternative. That's great. So we now have 2 options with an alternative. And please remember, all options are still long-term bullish. Even the alternative bearish option for Bitcoin going to 8 to 10,000, Ethereum to about 6, 7, maybe 800 is still long-term bullish because that would be a cycle 4 or super cycle 4 wave. And as we know from the Elliott wave, after wave 4 comes wave 5. I still am of the opinion that Bitcoin has a destiny with a 6 to 7 digit number, and Ethereum certainly in the high 3 digits to 4 digits number, as I'm still lacking a wave since their inception, especially on Bitcoin. And you probably wonder, well, when is that going to happen? Well, that's when I sent out, I believe it was on Monday or Tuesday, our essay on the 4 phases of cryptocurrencies related to the halving cycle, that we are now most likely in the early stages of this new bull run. And remember, there's also different phases, of course, to analyzing these markets, okay? And that pretty much goes down to, how do you profit from these 4 phases of Bitcoin, okay? And currently we're in a early bull market phase, it seems. And I gave you guys several reasons on why I think we are moving eventually higher. One was, of course, the BTC ETF approval, and that happened pretty much that same day or the day after. And eventually, this is when we get everybody to join the party. But for now, we are in a difficult phase where we have lots of ups and downs, like in June, minus 20%, July, minus 20%, etc. So that is the difficult part for the analyst as well. So here we have Ethereum. So Ethereum pretty much, right, is back to where it was 8-9 months ago. We're saying where we were in mid-June. We're back to where we were in mid-March, mid-February, mid-January. And I can go back, of course, even a little bit further in time. And that would then make us mid-October or mid-September last year, mid-August last year, mid-July last year. So essentially, right, we haven't gone anywhere for more than a year with, of course, some ups and downs. So that suggests that we are in a potential early bull phase or accumulation phase. And the wave counts we are tracking are kind of supporting this thesis. So we're then going to the wave counts that we're tracking, okay? So we have our low here in November, 5 waves up into April. For Ethereum, 3 waves down so far. Remember, Ethereum did not make a higher high in July compared to Bitcoin. Bitcoin made a higher high. So the wave count for Ethereum is now different, okay? And this perspective of this high, which is not a potential 5th wave, which it can be for Bitcoin, okay? So potentially a bottom here mid-August, but I'd like to see a lower low, somewhere around 1480, somewhere around there. For this green wave 5, that would be also very close to the CSA relationship. And that should then complete for this option, wave 2, and then wave 3, 4, and 5 are to follow. The ultimate line in the sand remains the November lows. This is option 1. Okay, so remember, once we break below certain key levels, it opens the door to new options, right? We had option A and B. We went through option B, which was a breakdown below key support levels, which then opens up a whole new line of doors. It is all about the possibilities of probabilities. The second option here is that we still are going to see another 5th wave before a larger 1st wave completed, all right? So here we said the 1st wave already used in April. But via this option, you get it in the form of, I would call it a expanding leading diagonal, overlapping. Okay, so it's very possible. It's kind of out of proportion wave 4. But again, this whole price action, everything looks corrective to me. I have a very hard time making this look like an impulse since the April high. It needs to be 5 down, 3 up, 5 down, and that's very hard. The best I can make here is, in my humble opinion, 3 down, 3 up, and now potentially 5 down, which makes it a flat correction. Okay. And then the last option is still, though, somehow we're going to boil and this into this final C wave of wave 4. And we bottomed here in June, and then we had an A, a B, and a C wave into the April high. And now we're doing some very complex wave 2 into July, A, B, C. It is possible. It's not preferred. It's possible. Because of this super flat price action, this is hard to interpret to exactly know what it is. And this will only be operable if we start, of course, losing further key levels. So this wave 2, the first option, has a floor, of course, 1,075-ish. Break below it, this option is not possible anymore. This option has a floor here at 1375. We break below it, it's not possible anymore. Why? Even in a diagonal, wave 4 cannot go below the end of wave 2, which is the start of wave 3. Okay, so these two options we have loud and clear invalidation levels. And I know we all would like to always be right about the market and its next directional move. Okay, not on a minute, hourly, daily, weekly, but months time frame, right? Where we really see a nice trend. But we are, I would say, intelligent, smart, well-versed, flexible, and open-minded enough to know where we are wrong, and that we then have to concede that we are wrong, and again, step through the door and say, these are then the options we have. So we go below 1375. This option is off the table. We're starting to start looking at this option with still this as the alternative. We then go below 1075-ish. This option is fully functional. That will then complete primary 4, and we still go to primary 5. Okay, so again, it is then intermediate term bearish, long-term bullish. Okay, this is about to complete intermediate term bullish, then bearish, and then bullish again, because this will then be 5 waves up, wave 1, wave 2, and then etc. Same here, we have completed 1, 2, bullish. So all these wave counts are ultimately still bullish. I have a very hard time turning it into something else. This is still corrective. Then we had wave A, wave B, and wave C for wave A, B, C for wave B, and now finally a final impulse lower, which could also morph into a diagonal, hence the overlap, into again somewhere around, I would say, 700-800 plus minus 100. Okay, cryptocurrencies do have a tendency to have failed fifth waves to the downside. I've seen it several times on these time frames, so it wouldn't even surprise me if this fourth wave fails and bottoms just a little bit north of 900. It would leave everybody guessing. But these are the options. Please know we are below the 50 and 200-day moving average, which are about to cross bearishly. Last time they did it was here in early 2022, and that was not a great sign. This wave count is, of course, invalidated if we start going above the April highs or even start going above the July highs. Okay, very simple. If we start doing that, then this wave count is invalidated as the alternative. From a ETF perspective, this is, of course, the Grayscale Ethereum Trust. It looks like that spike high on massive volume based on the court's decision that the SEC was wrong, but it doesn't mean it will turn into an ETF. It should increase the chances this will be turned into a spot ETF, has increased. But still, this price action here looks corrective, looks more like an ABC, up into the high made on Tuesday, and that we are still going to see lower lows for this wave too. We should then see some nice positive divergence develop. Look at the MACD here. It's kind of similar to what we saw here in early June, right? With marginally lower and then higher. Looks kind of similar to what we saw here in December, right? Bounced a bit lower and then higher. And I think we can go even a little bit further back in time. Same here, right? We went a little bit lower and then higher. So we have about a similar MACD's setup in place. I know this is no guarantee it will, of course, behave the exact same, but also note that we have some positive divergence going on money flow. And I want to see a lower low with increased strength. That is also a nice divergence. So we had a nice spike high, no follow through. Now we have overlap with this price action. So I think the 5 waves up of the low here are off the table, and we simply are dealing with a more complex correction. Remember, I always say after 3 waves down, expect 3 waves back up. Why? Because this is a zigzag low. And then we can decide, the market can decide if this wave 2 has completed or it's going to get more complex. It adds on another 3 waves up and then 5 waves down. Because then you get a flat. A flat is a zigzag down, a zigzag up, and then an impulse low. 3, 3, 5. So after 3 waves lower, correction can be complete as a simple zigzag, or it turns it into a flat 3, 3, 5. That we don't know beforehand, so we always have to be very cautious. And therefore, we place this question mark 2 here, but I think we can now say more confidently that we're going to go a little bit lower first. That's my preferred view. And then we have completed our correction. All right, that brings me to Bitcoin. And I've shared with you these options before that we're going to complete wave 5 of A, all right? Somewhere around 24.5 plus or minus 500, maybe 25,000 plus or minus 500. But again, we're starting to see some positive divergence develop. Okay, also here on the MACD. Again, reminds me of what we saw here, this setup. Reminds me of what we saw here, similar setup. And again, that we're starting to see positive divergence in money flow. It's still not great, but it looks like we have now more money starting to flow into Bitcoin than we had at higher prices. That's good. It's a condition, it's not a trigger. And then we completed this leading diagonal blue wave 1, 1, 2, 3, 4, 5. It's good, it works. It's a little bit ugly, but again, if this is a leading diagonal, they are ugly. And again, it takes about 75% of the price action to be able to identify this will become a leading diagonal, okay, because of their overlap. If 4 and 1 overlap, one is more inclined to count it as an A, B, C, for example, okay? But in a diagonal, that is fully allowed. So since we are then dealing with this wave 2, we must acknowledge that those waves are 3 waves, because it's the second wave that's corrected. So we should see a bounce back to about 30,000 plus or minus 500, I would say. That has been the congestion zone, as you can see. And then we're going to get the C wave lower. And the C wave lower can go all the way here to about 19,400 or stall at around 21,500, somewhere around there. Cannot go below 15,500. Normally, a leading diagonal or an ending diagonal, whatever it is swiftly retraced to the beginning of the diagonal. All right, the diagonal kind of began here. So that would target about 20,000, which gets us very close to the 76.4% retrace and very close to the lower end of this C target zone, which is C is 1.618 times A. It all depends on where exactly is this wave B going to top. The higher it goes, okay, the higher the C wave will be. So we can top, for example, at 31,000, okay? And then we have to pull this one up about 500 points. So that we don't know yet. So this is an initial target zone with the green target zone, the normal retrace for a second wave. I like this. There's nothing wrong with this wave count at all. It is absolutely valid wave count, okay? 5, 3, 5, 3, 5. It's nothing too bad or out of the ordinary with this one. 3 is the longest wave, perfect. So actually, not the shortest, I mean. So then we have 1, 2, 3, 4, 5, with 1 the longest, 3 the second longest, 5 the shortest. It's okay. I like it. So this one is pointing higher, okay, for Bitcoin. This one is going to point much higher, 35,000. So now we have 2 options that are pointing higher. And then we are still in a larger leading diagonal. First wave going to about 35,000. So here we then have a 1, 2, A, B, C for 3. 3 is about 1.236 times the length of 1 in a diagonal. Wave 4 often goes to about the 50 to 38.2%, somewhere around there. And then a wave 5 to 161.8. Absolutely possible. So instead of the diagonal already having completed, it is subdividing one more time. Fully acceptable. And of course, this option is also off the table below the second wave because the fourth wave cannot go below the second wave. Whereas in this option, we can go below the second wave. All right. So we don't know yet which of these two options is operable. We simply present now the options because we broke below, of course, the support level here at 21 and 28.5, which would open up new possibilities. Then we have a nice 1, 2, 3, 4, 5 lower of this ABC. This would then be a irregular expanded flat wave 4 and then wave 5. Again, as I said yesterday, when do we know that this count is operable? I would say if we start going above 30,500, chances start to increase. This is not a bounce, but a new impulse. And then this is our bearish alternative. Okay, some ugly ABC higher for this B wave with the A wave here in November. And we've now done an impulse lower. We're going to bounce back to about 29,000 plus minus 1,000. That is, of course, the congestion zone, loud and clear. And then the wheels will come off. We're going to drop all the way, I would say, into 10,000, back to about 15.5, 17,000, and then one more time down to about 8 to 10,000, somewhere around there. That would then complete C of super cycle or cycle 4, whatever you want to call it. It's fine. And after 4 comes 5, and then we can still reach the 100,000. So I cannot discern yet which one it is. This is my least preferred wave count. That's why it's an alternative, okay? Because of also Ethereum having the odd B wave, whereas Bitcoin made a higher high, Ethereum didn't. So this is not a B wave, the July top for Ethereum. I cannot make this a larger B wave top because we made a lower high. So it's not possible. So I want to align these options with each other because 9 out of 10 times Ethereum and Bitcoin kind of run in lockstep with each other. So then these two options are the most comparable. Option 1 for Bitcoin, option 2 for Bitcoin, right? Option 1 for Ethereum. Ethereum is then a little bit further along. It just had a different ABC. And similar here for the fourth wave, okay? And then the alternative for Ethereum is the C wave, and the alternative for Bitcoin is the C wave. So I think we have a nice alignment, and it matches really good. Remember, I think up to August 8, 9, or 10, everything looked great, and then August 17, things start to really fall apart because we dropped too low. In the sense that this could not be a first wave. That was then our primary expectation, 1, 2, and then 3, 4, and 5. But again, maybe we have to go to 8 to 10,000. I cannot tell you which of these counts is operable, but I will tell you that we have, of course, these key price levels in place that will tell us which one it is. So this one cannot go below, of course, the November low. If it does, then this wave count is operable. And this one cannot go below the March low. That means that either this one or this one is operable. So we have now loud and clear invalidation levels that will tell us what's going to happen. And this wave count is, of course, invalidated above about 32,000, right? That's it. Very simple. Very simple. Then we know this wave count is not operable anymore because second waves cannot go above the start of the first wave, right? Fourth waves in the diagonal cannot go below the end of the second wave. If we do, this chart is off the table. And second waves, as I just mentioned, cannot go below the start of the first wave. So this one is off the table as the levels. We're not even close to any of these levels, but this is what we're going to watch. I like it. Good to go. GBTC looks also better as a spike high into Tuesday's high on this news. And I would like to see it drop to about $16. That would be all we need for this wave 4. And then another wave 5 to go. Okay. That would be really great. Also here, start potential positive divergence condition, not a trigger. This is now my preferred wave count. Mara, as I said earlier this week, I'm going to monitor for 5 waves up. We did get 5 waves up because yesterday we did get a higher high. So if we would zoom in on Mara a little bit more, then this would be 1, 2, 3, 4, 5. And we're now correcting this rally. This means that indeed Mara has bottomed already. Okay, we have bottomed. and which would match with this wave count, right? 5 of 5 of C. It also means that we have to hold, of course, the lows made last week, last Friday. If not, then we get some sort of irregular flat, A, B, C. In irregular flats, the C wave is a 5 wave, just as I mentioned, that a simple zigzag can become a flat at 3, 3, 5. We could have something like this. This is 3, 3, 5. It is possible. It's not my preferred wave count. It looks, as I showed you here, quite complete. The downside 1, 2, 3, 4, 1, 2, 3, 4, 5, 5, C. Okay, if not, then we have to reconsider everything that we are currently tracking. But again, it does look good as 5 waves up on the smaller time frame. I can really count it that way. So we're going to give the benefit of the doubt to the bulls until they break below last Friday's low, which is about 10.25. Last but not least, Riot definitely went a tiny bit above the ideal wave 4 target zone. Would look better with a wave 5. So Riot might not be as far along as Mara just yet. Okay, somewhere around here. That'd be great. So then this is 4, and then here we go with wave 5. Also here, remember, we're starting to see a lot of positive divergence. It's a condition, it's not a trigger. See here, we are now kind of starting to move to similar levels as where we were in mid-August, but money is starting to flow back into Riot, which is a good sign, but it's a condition, it's not a trigger, okay? So we're going to look here for potential lower low, marginal lower low here, about 990, and then we are ready for blast off. Wouldn't surprise me if that's the case. Would look better that way. 1, 2, 1, 2, 3, 4, 3, 4, 5 of C of 2. And then at the minimum, I expect this to go back to about 15.5, somewhere around there, potentially 17 at the minimum. Okay. Longer term, I still expect much higher prices, as I shared with you in the bigger picture earlier. This is really all I have for you today. So we're going to track the Ethereum and the Bitcoin charts. We have 2 primary options. We have 1 alternative option. We know the price levels to watch, below which or above which these options are invalidated. That is currently all we can do for now, especially since the price action is not trending, even long term. So then we have to concede that things are a little bit less clear. Once we see stronger rallies once again, we should be good. And remember which phase we are in. Things that go sideways are boring. Nobody's interested. It's often the early phase of a bull market, which indeed could be a 1-2 setup. And then nobody is going to get interested in Bitcoin until we get to the end of wave 3, potentially close to the end of wave 5. That's really where the masses will start to get interested. And this whole cycle of 2021-2022 debacle will then repeat itself, unfortunately. But that's the only way for the markets to work. So if you're listening and you are a retail investor, please take that to heart and make sure you're going to take a mental note of what you're doing wrong when it comes to, for example, cryptos, and if you want to be an early investor or if you want to be a late to the party person. Take care, trade safe, and I'll catch you all next week. Bye.